Well, welcome everyone to GTR MENA and to our session, which is Better Together, Can Technology and Innovation Help Close the Trade Finance Gap? So we're going to have a wonderful session for you for 45 minutes. If you have any questions, you can please put them in the Q&A and we'll pick them up as we go along. But before we start, I must say this has been a really fantastic event here in MENA. I'm actually in Dubai. And it's really been great. In fact, I think the sessions virtually have been better than the physical sessions. I think people are very much on point, are focused, are clear in their answers and in their questions. And something really interesting for me is I think all of this ego stuff has gone out the window, okay? I think people are very open and really collaborative, so we are making progress. But back to our session. Better today, can technology and innovation help close the trade finance gap? And our panelists are really wonderful and the right people for the right job. We have Lisa for the Global Trade Professionals Alliance. We have Slava from Verity. We have Sudhir from the Trade Information Network and Carl from Contour. And then Sean Bowie from Saudi British Bank, the banker in the pack, who's we're going to come to a little bit later. So to get us underway and get the dialogue actually moving, we're going to move away from advances in technology and we're going back to tradition. And that tradition is ladies first, which I think is a tradition we should retain. So Lisa, if I may turn to you and put to you a question, the session is can technology and innovation help close the trade finance gap, which is estimated at 1.5 trillion. I actually think it's significantly more, but that's another story. But my question is, a broader question, maybe to set the scene, can technology and innovation help close the trade gap and facilitate more trade, more business, and the trade financing will come to later. So, Lisa.
Thank you, Vin. And I think the last time we were together was the last time I actually traveled was for MENA in Dubai last year. And I have not left the country. So we're virtually meeting up a year later, but it's nice to catch up with you in this forum. Anyway, I'm going to leave it to the real experts on trade finance to talk about how technology is going to drive trade finance. But from our perspective, in terms of looking at this from a broader trade perspective, absolutely. Technology is going to drive how we look at trade facilitation in the future. And trade finance is a component to trade facilitation. So one of the things that we have been looking at as an organization is how do we look at building frameworks around standardization of certain data aspects that are required for trade and build those into a harmonized standards framework of which the data is the way in which we can look at compliance, not the piece of paperwork that is submitted. So often when we have looked at how we reduce the need for 600 pieces of paper for a shipment in a container, we've often talked about the fact that these people still need to get the data and they still need to submit it multiple times in multiple ways. One of the things that we're trying to do as an organization is look at this from a slightly different perspective. If you feel that the data that is inputted has been certified and is authenticated, why is it that you need to keep asking for the data, or why do you need to keep producing the evidence? Surely it should be that government or the private sector can just tap into some certified data set to get the evidence or information that they need. And of course, blockchain plays a huge role in this, but blockchain is only as good as the data that is inputted into the framework and the system.
Okay, and if I just to pick up on that point, like your point, you're painting a picture that we're on a journey, and we're on the journey moving from paper, which is the way it actually evolved, into the digital landscape. Okay, but can I ask you to say a few more words about developing the digital standards, where we go, and of course you can mention the blockchain as we go forward, but that's a big challenge, I guess.
Yeah, I think blockchain is. I think it works in the trade finance world because, and my other panel members will talk more better to it. In the broader sense, when we're looking at trade documentation in global supply chains, it's a lot more complicated because you have so many different stakeholders, and they don't often want to work together because they're competitors. Which, yeah, banks are competitors, but they've traditionally been able to work together through other mechanisms. But from this perspective, I think it's very important that we look at the long-term need to then have some harmonized standard framework. I'm not saying create a brand new standard because there are way too many standards out there already for businesses to comply with. What we need to do is look at how you streamline and harmonize standards into a more simplified framework. And then from that perspective, how do you make it easier for particularly SMEs to comply with that framework? But if you take the long picture, if they can comply once at the very beginning and they're audited, and so you can audit all the way down to the rules of origin and the origin of the product once in a supply chain, and then you add on things like integrity standards that everyone is concerned about in terms of modern slavery. If we can look at it from a different perspective in terms of certifying data once, and then how do organizations access that data, then we can completely reimagine how we are looking at this idea that you keep needing to give information. I.e., yeah, we can create electronic documents for anything, but you're still continually asking people to produce that document at a cost, both from a compliance perspective or the issuing. And so, yeah, I think we can reimagining it. And I do think finance, in the finance world, is the real starting point.
That's wonderful, Lisa, and really, I think you've really set the scene and set up our guys with some challenges here that are following behind you. Like you're pointing out that this really needs to be simplified, and by doing so, we can create greater access for parties to trade. Greater access for the parties to trade should also mean, I hope we're going to hear about it, great access to finance, in particular trade finance, and of course standards, as you say, play an important role in it. But we need to be careful because we have a lot of standards already. Let's not just reinvent the wheel over and over again. That's really sets us up really wonderful. So moving on to Slava from Finverity, and Slava, I had a look at your website, and I see you've won many awards, and I really like the simple, clear language. Actually, talking about simplification, the simple, clear language you're using to explain what you're actually doing. So we've a trade finance gap, and the way I see it, there's too much money up here floating around, but where the money is really needed with the SMEs who are actually pushing ahead the economy, they can't get their hands on the money. So there is a gap. So on your website, you say you're going to solve the trade finance gap. So maybe you can tell me and you can tell our viewers, come on, how are you going to solve the trade finance gap, or go a long way to solve the trade finance gap? Slava.
Thanks, Vin. Yeah, indeed, it's all over our website, so it's difficult to avoid that question. But in reality, when we started the company and we had this idea in mind of helping to relocate capital and help to close the trade finance gap. So once we started analyzing and looking at it, actually, if you look at Asian Development Bank report that initially highlighted the gap, you'll see that around 60% of that is concentrated in emerging markets and around 74% in SMEs and mid caps, right? So we started thinking, why is this gap there? How does it historically happen so that it's become like that? And when we started digging in, we realized that traditionally this industry has been dominated and funded by large banks that have unfortunately been either withdrawing or limiting their allocation to the industry in 2008 with increased capital requirements and complexity of the processes if you have to do it manually without digitalization and so on and so forth. And at the same time, you have the trade that has been going through the roof and increased demand for this type of financing from the corporate side. So you had a dry up of liquidity on one side and then increased demand on the other side, which is why I completely agree with you. And in reality, this gap is probably a lot larger than 1.5 trillion. However, what we're seeing on the other side is that there's actually a massive inflow of alternative capital, which is trying to get into the industry. Because interest rates are non-existent and yields in traditional fixed income products are pretty much not there anymore, especially with all post-COVID stimulus that our beautiful governments have unleashed on the markets. a lot of these players are trying to come into the asset class and trying to get reliable and stable yield, but they don't necessarily have the operational capabilities or the origination channels to be able to do that effectively.
Okay, Slava, if I just stop you there, I think you really summarized it wonderful. We've all of this money up here, as I was saying, the investment money, and then we've the gap here. And if you're going to actually bridge the gap, okay? But to be honest, you haven't quite said how your platform is going to do it. Maybe you can just give us a bit more granularity how you're going to actually bridge this gap, if you don't mind.
Of course. I think the first step is making sure that this asset class is attractive to capital markets and alternative investors. And that comes back to aligning the product and the yield requirements. So, for example, most of trade finance funds or private credit or fixed income guys are not really interested in getting 100 to 200 basis points by financing very large companies, right? So they're much more interested in getting some decent yield of 6 to 10% kind of range. And that's why you need to focus on offering this type of financing to mid-market companies, which have traditionally not been financed as well, especially when you talk about supply chain finance, which is what we do. So it's aligning this return to risk requirement, and then making it through a supply chain finance or payables finance product also helps a lot, because of it removes a lot of the risks because it's post-good, so they don't have to dive into all of the operational risks that need to be handled if you do pre-good financing. And it is revolving instrument, so it mimics a fixed income instrument to a certain degree, because that gives them a lot of comfort that they can do due diligence once and then effectively have their money in there for a very long time. But what you need to be able to do that is a lot of automation, right? And that's why historically this hasn't been offered to mid-market, because it's a lot more complicated to do everything from KYC, onboarding, and all of these processes. So effectively, you need, what our platform does is it automates around 80 to 90% of mid and back office processes that these guys would have to go through in order to access this asset class. And then it makes it viable for this type of product to be offered to mid-market and for alternative investors to be able to tap into it without having to build a massive back and middle office to be able to handle all of the transactions. So I think that's the key. And
that's the key. That's the key, Slava, and you've definitely answered my question. And actually, on your website, you have a really nice video on the top right-hand side. So I do check you guys out before I talk to you. And actually, I want to compliment you on it, because so many people's talking about this business to break it down into the payables and the receivables. But actually, your little video kind of captures the whole ecosystem, because you've got to look at the whole ecosystem, really, if you're going to implement a solution that works on both sides of the equation, as you say, the investors and actually the receiver. So we'll come back to you a little bit later. So moving on from the platform, we're going on to a network. So there's networks everywhere, platforms everywhere. And I'm going to go ahead to Sudhir from the Trade Information Network. And again, Sudhir, I was looking at your website, and I saw that there's a comment from my good friend Mark Evans of ANZ, who I work with on the ICC Banking Commission. And he says what you're doing is really good and really different. So maybe we'll start there, Sudhir. Tell us, what is different about the Trade Information Network? Sudhir.
Thank you very much, Vincent. And it's great to be on this panel today, talking about this very important topic. And thank you for the kind words with which you introduced me and the platform. So what's different? I guess let's look at the key issue here, which is that bankers have been aware of the trade finance gap. They are aware there's both an opportunity as well as a challenge. And why have we as bankers not been able to tackle it? Principally because there are certain pain points in this to fix this gap. And so our shareholders, who are amongst the largest trade banks in the world, which are ANZ, BNP, Citi, Deutsche, HSBC, and Standard Chartered, got together a couple of years back and said that let's create Trade Information Network, which will help in fixing some of these pain points. And today I would like to talk about 3 of these pain points with you and how very specifically Trade Information Network is addressing these pain points.
Sounds good.
Yeah. So the first big pain point, which is fraud risk. And we know what's happened in Asia over the last couple of years and the risks associated with fraud risk. So typically, let me explain this with an example. A supplier would typically go to his bank, give him the purchase order and say, I want financing against my purchase order. And the bank would be worried, is this a genuine purchase order? Is it a confirmed purchase order? So they are not sure. Now in our platform, what is different is that the PO details, the purchase order details, do not come from the supplier. They come from the original source, which is the buyer.
Buyer, okay.
Yeah, and therefore you would ask, how is the buyer on this platform? Well, the buyer is brought by the buyer's bank. So what we have here on our platform is that the buyer's bank and the supplier's bank are both collaborating to fix this problem of the fraud risk. So collaboration workspace is a key thing which is there on our platform. The second important problem is double financing risk. So on our platform, once an invoice or a purchase order is financed, it cannot be financed again. So we have put that safeguard. Of course, if someone goes outside the platform, they can still get financing. But as our platform becomes an industry standard, this risk will also reduce. And then we have put various checks and balances on our platform. Like, for example, a bank can do a lookup on whether an invoice or a PO has already been financed. If you are a bank who is a PO financing bank and your supplier goes to a different bank for invoice financing, you will get an alert. So a lot of checks and balances.
Okay.
And the third risk is performance risk. And our platform has the potential to capture a lot of data. We spoke earlier about data. It has the potential to capture a lot of data. So one can start analyzing performance risk to see whether the goods are being shipped on time, whether there are dilution happening, credit notes being raised by the buyer. So think of it as an early warning system. Today, in real time, if you are a bank, you are able to analyze whether there is a deterioration in the supplier, compared to the situation today in the real world where we are waiting to get the financial statements of the SME supplier. And by the time we get it, the horse is probably bolted, right? So I think the way our platform through real time is able to monitor. So essentially by fixing these three big pain points, which are fraud risk, double financing risk, and performance risk, we hope to build the risk appetite for banks to fund the trade finance gap.
Yeah, Sudhir, that's a really good description, and I'm going to give you another pain point. I think you're good at these pain points, so I'm going to give you another one. So my pain point for you is that this ecosystem sounds wonderful to me, but it needs scale, as you've said yourself. So how are you looking at the onboarding that you will actually achieve this scale? Because if you achieve the scale, it's without any doubt, this is a real success story. How are you going to address this pain point or the challenge of the onboarding?
And that's a very good question, Vincent. And we all know that's been a big pain point, onboarding. So we have kept the platform very, very simple and straightforward.
Okay.
Right? We just ask about 4-5 questions to get the supplier and the buyer onboarded. And it's important to note here is that we are an invite-only platform. So think of us like a LinkedIn. Typically, the process would be the bank would be invited by us. The bank in turn would invite the buyer. The buyer in turn would invite his suppliers. We'll ask about 4-5 questions, and within 72 hours, you would be registered on the platform.
Okay.
So it's very straightforward. And then subsequently, you can integrate with us through APIs, through SFTP, through the UI. So it's a very simple experience, also very straightforward for buyers and suppliers to interact.
Okay, that's really interesting, Sudhir. And yeah, you answered the question very well. Like if you can get the key players engaged, well, that's a result already. And then as you go forward, you build on the ecosystem. And again, I guess in time, in concept, it should become truly global. Well, moving ahead, but we'll come back again, Sudhir. We've let me see. Oh, we've 1 or 2 questions coming in, but I'm going to keep moving because I think we have got some momentum here. So moving forward with Carol of Contour, and it's interesting, our 2 technology talkers so far, Slava and Sudhir, I don't think they mentioned the magic word blockchain, okay? Yet, I don't think so. They talked about technology and a solution and network and whatever. No, maybe it's in there and it probably is. But I know, Carl, that you are really a champion of the blockchain on and Contour. And maybe I can put you on the spot a little bit and tell me why you are a champion of blockchain. Now, everyone knows it's around, it's important, but it's not getting the volume it used to get. But I know you're still totally committed. So maybe we'll start on that and then we'll follow on. Cara.
Yeah, great. Thanks, Vin. So again, just to explain quickly, Contour is a network of banks, corporates, and technology partners that are using blockchain technology to make trade finance more efficient, secure, transparent. So we also started like Tin as you know, some of the top banks in the world: HSBC, Standard Chartered, ING, BNP, Citi, some regional banks, SCB, China Trust, and Bangkok Bank. So big and small banks together.
Okay.
And what the solution we're trying to solve first is letters of credit. So we've chosen letters of credit as our first product to manage on this platform. And I mean, the one reason to choose letters of credit was it's a standard everyone knows, right? So we're not building anything new. And similar to Amazon selling books, right? Let's build the network first, and then we'll add more services on it later. But and so we're starting with LCs, and we've been live in 17 countries since last year. But blockchain, we don't talk about blockchain. Before this, I was at R3, and all I sold was blockchain, right? And so blockchain was, when I said go to seminars, the good thing about blockchain was that it didn't, one thing good about blockchain is you could get budget for something if you said it was on blockchain, whether it worked or not, right? Well, those days are gone. People understand blockchain more. They understand the difference between blockchain and Bitcoin. But I mean, blockchain is a inherent technology that's very useful for these global collaborations, right? So we don't lead with blockchain. We happen to use blockchain or distributed ledger technology to be more accurate. And it's the ability to manage databases. Blockchain or DLT is the ability for databases, everyone to hold their own database in their own country, right? In their own bank, in their own corporate. And it's a communications protocol for all these databases to work together. So you don't have the risk of a central database, or some countries or some regulators will have a challenge with having a database in another country. I think something like Swift would have, to build Swift now would be a little more difficult, right? Because there's a lot of countries that say, no, I don't want my data sitting in another country. So blockchain is a technology. It's not the cheapest technology. A centralized database is cheaper, but it's more elegant because it allows different databases to communicate.
Well, Carl, that's really interesting. So blockchain is not the core; it's really the enabler of what you're actually doing. So you really explained it really, really well. Like for me, I don't know much about blockchain, but it seems to, when I look at examples, it seems to work pretty well for stocks and shares, for currency, where it's kind of one thing moving to another. But in trade, we've also multiple parties. Is that a challenge for you in Contour in terms of trade? So many, as Lisa said, so many stakeholders, so many parties engaged. It must be a challenge, but maybe when you're overcoming.
Yeah, no, we're overcoming it by working with partners, right? We know we can't build everything in the world, right? So we're focusing on our main customers are the corporates and the banks. We work with technology partners, whether they're an order management platform or a national trade platform, a carrier platform. Anyone who can give us data can interface with us, and they don't have to be on blockchain. They could be, they could use APIs. They could be a blockchain. They could be blockchain as us, same on Corda, which would be nice, but it could be another blockchain system, or it could be a non-blockchain. It doesn't matter. APIs, the point is to get the data in a structured format, right? And then that allows a lot more things to be done, analysis or management or verification to be done.
Okay, you're very convincing, and you're really bringing it all together. But there's still a gap in my mind. There's a big trade finance gap in my head. So maybe you can help me fill it. And that is, could you give me just an example of a recent transaction concluded by Contour? Because then I think we'll be able to see where the parties that mentioned by Lisa fit into the structure. One simple example.
Someone like a Nanjing Steel in China, ordering from a Rio Tinto. Right, in and out of Singapore, the goods moved actually from Australia directly to China, but the LC was issued, in China or in Hong Kong, and then goes to Singapore to be negotiated. They're all on the platform, and the ability to see that same piece of paper. It's a virtual piece of paper, but as it moves through the transaction, everyone's looking at that same data at the same time. It's not waiting for it to be mailed or emailed, or there's no version control issue because everyone's looking at it at the same time.
Okay, that is really interesting. And we had a comment on the feed, and we have a question. And the comment, first of all, is someone is really agreeing with everyone here, saying that really the challenge is to link up these pools of capital with the SMEs and the companies. And actually, they're commended that the presentations are very good and actually giving us a lot of information. But there's a question: is what we're seeing in digitalization, is it a digitalization revolution or a digitalization evolution? So maybe we just go through. I just want one word, Lisa: evolution or revolution? You're on mute.
Evolution. Oh my gosh, that's really hard to answer. I do think a lot of this is evolution. It's because technology is always just building on itself.
Okay, one word. Okay, but evolution. Okay, so Slava, what do you think, evolution or revolution? Because I think your website, I think, says revolution, I think, or something like this, Trade Finance. Sorry.
Yeah,
okay.
I would say it's more of a revolution, because I think we need a bit of a more comprehensive change to the system than just a gradual evolution. But again, that's subjective.
It's subjective. So it's either an evolution or a speedy revolution. No, a revolution or a speedy evolution. Okay. So there, what do you think? Evolution or revolution?
It's evolution combined with collaboration.
Well, actually,
I think collaboration is key.
Collaboration, it's very interesting, because I'm no teenager, as you can see, but many years ago, living in Ireland, the word collaboration is a bad thing. You shouldn't collaborate, okay? But now the word collaboration has actually turned into something good. So evolution or revolution? Carl, evolution or revolution? Just to answer the question.
Say evolution to start.
I kind of like that as well. And now we're going to move on with Sean. And actually, just going back in time a little bit, my mother is actually 95 years old, and she reads the Financial Times, well, when she can get her hands on it, because she did, but she always used to say to me, and she'd ask me questions and I couldn't answer them, but she always used to say to me a few years ago that, I think this quantitative easing is not a good idea, okay? So maybe we'll get my mother on the panel next year. I think she'd fit, she's 95, she'd fit in here perfectly. Okay, so moving on to Sean. Sean from Saudi British Bank. Now, Sean, we can see you on screen and you look incredibly fresh, but I know you've been involved in trade and supply chain for a long time, so you're doing something right, okay? But Sean, what do you make of all of this technology and innovation as a banker doing trade globally, okay? Are we on the right track, or are we going to narrow this trade finance gap and open up financing for the SMEs?
Thank you, Vin, and thank you for the very complimentary introduction. Yeah, I think absolutely we're on the right track, and it's for the reasons that our other guests have already kind of pointed out. From a bank perspective, you'll recognise we're not a monolithic institution. We have this constant creative tension between risk and reward. And as a trade finance guy, of course we want to put the liquidity into the market. We do that without a second invitation. But we have these guys that sit in rooms and they study the risk, and we need to make sure that they feel comfortable with the risk. So all of the digitalization is helping us to bridge that gap. So if we look at the risks from a bank perspective, and they've already been touched upon, we have the credit risk, the risk of dilution, the performance risk. Are these suppliers up to it? Often the SME is the supplier, and this. The digitalization helps us because we can see, exactly as has been pointed out previously, the whole transaction. We can see the statistics, we can see the data, who's performing, who's not performing. So it really helps us from a credit risk perspective. It gives us more payment triggers, because in a transaction that everybody can see every stage of the transaction, and you're confident that each stage of that transaction is verified, as a bank, that means I've got a payment trigger here, I can extend payment terms for longer. I've got another payment trigger here, I can extend payment terms for longer. So we can get the money into the SME sector quicker and with more confidence. If I look at the local market, in Saudi, there's a digital platform for invoices from the Ministry of Finance that only go on there once they've been confirmed. So that takes out all of the commercial dispute risk, takes out all of the performance risk, and I've got a payment trigger right away that gives me a much more confidence to finance into that sector. On the other side of, sorry,
no, just to stop you, that is a really simple but practical step, and that is really interesting. So Sean, please proceed. Yeah.
So the other side of the risk equation, of course, is the financial crime risk, and that's also been touched upon. Sudhir pointed out. So we're looking, if you're looking at fraud risk, double financing, all of these kinds of risks, they again can be taken out of the equation to a certain extent if you have full visibility into the transactions, and not just, I think this is a very important point, not just bilateral transactions, but a network of transactions. Because once we have a network, we can build a map. We can see who's trading with who. We can see who's connected to who, which individuals are connected to which SMEs are dealing with which large corporates. And once we can see that, and we have that kind of neural network, it allows us to again finance into the ones that we're confident of with a lot more precision, and it frees that liquidity up to go to the good actors in the equation.
Yeah, please. Yeah.
No, so I mean, so from both sides of the risk equation, it really helps to get liquidity into the SME sector. I mean, the other point, of course, is as Slava was pointing out, that in these times when there's credit difficulties, COVID's having all sorts of difficulties creating all sorts of difficulties for the suppliers. They've got credit losses, absence of workers, lockdown, very difficult conditions, and it's hitting the SME sector the most. So banks is a limited pool of liquidity amongst the banks, and that's being moved to safety, to quality, because you've got one pool of liquidity from the banks, and it's tending to gravitate towards safety.
Sorry to interrupt you, but I think, I don't know about the shift to quality. I wouldn't agree with you on that, but I definitely think there's been a big shift to safety, okay? And because the shift to safety is happening, a lot of people who actually need the financing can't get it. So how are we going to address that challenge?
Well, exactly. Fair point. Exactly as we were saying before, there's been a lot of barriers to entry for these good actors, for these smaller players, genuine businesses, the companies that need financing. And digitalization is helping to reduce those barriers to entry, because it's easier to prove, if you're on the right networks, right platforms, it's easier to prove who you are, what you're doing, who you're connected with. And it's easier, once you're on there, it's easier for you to connect with more counterparties as well. So from an SME perspective, it can almost have a snowball effect, because once you're in there, you're opening up your environment, and you're growing, and as you grow, of course, your credit quality increases, and your the risk appetite of the bank towards you improves. So hopefully, it has a snowball effect.
One of the commentators on the Q&A is actually agreeing with you, Sean. He says, agreeing with you that technology is definitely an enabler. The data provides transparency and better decision making. But again, it's gone back to, I guess we've addressed it a little bit, but maybe you've seen as they brought it up in the Q&A. So technology enabler, agreeing with you. Data transparency, very, very positive. But how do we give the access to the companies? Now, he didn't say SMEs, but it's also good picture the smaller guy when you answer that type of question. How do we provide the access?
Yeah, it's a very good question, and the interoperability between platforms and data is going to be key. And if I look, I know the local market. If we look here in the local market, we have the Ministry of Interior has a platform for registering your business and your personal information. It's very simple to use. And then the banks can tap into that for their KYC purposes. So it all connects together. So that kind of interoperability and some of the technologies that we're looking at, and the will help. So you're not limiting yourself to one single platform. You're not linking yourself to one single bank. And this is, someone made the point earlier that banks need to recognize also they're not the only game in town anymore. So you need to have that connectivity and work together. And I really think that's how it's got to be going forward.
Okay, so do you think this connectivity that you're illustrating so well is kind of going to democratize finance or trade finance as we go forward? I guess you're going to be optimistic about this? What do you?
I'm very optimistic today. I think it's the nice introduction you gave me, Vin. You put me in a good mood. It does, because all of a sudden the platform is or trade finance is becoming open to counterparties that might not necessarily have had that access before. So an SME in a remote location that has some advantage perhaps, but couldn't access into a network because they weren't close to a major port or a major center of industry, they all of a sudden can plug in. Female entrepreneurs who haven't typically been able to get into the business, right? They can access online. They can access more easily into trade finance. So it should open up opportunities for a lot of entrepreneurs and a lot of SMEs to come into the trade financing world.
Really, and before I'm just going to go back to our panelists again, but Sean, just another question. I think maybe it's for you, it's for everyone, but it's kind of does the shift in the shift in bank structures with the regional banks playing a more active role in supporting trade, is this a positive or a negative development? Okay, another good one.
Well, it can only be good if there's more banks involved. The regional and local banks know their markets, know their economies, and if we're if we're using common platforms and common systems, you're connecting the banks together and introducing more liquidity into the equation. So I don't see how that could be a bad thing.
I think it's a good thing as well. I'm inclined to agree. Sudhir, a question here is I guess it's for you. They didn't say, but what happens if a trader submits an invoice and then I guess it's registered on the system, so you have it in the database, but then they register another invoice, but they change the invoice number. Clever guy, Well, maybe will the system pick this up due to other variables, or
So on our platform, if the supplier submits an invoice,
yes,
it's just not it stops there. The data then goes to the buyer, and the buyer can accept the invoice.
Okay.
Right. And then you're getting basically an authentication by the two parties. So both the parties have to together connive to create a fraud situation. But obviously, that the probability of that happening is significantly lower.
Yeah, absolutely. It's still a possibility, but you're narrowing this fraud risk challenge significantly. I think that is a very practical answer. You can't avoid fraud completely if the guys are in this together, but that's another story. We have a very interesting question here, a short one, but I think it's for everyone as well. And so we're getting a good reaction. Well, we're getting a reaction. I think it's good. And if someone has asked, how would we define a blockchain letter of credit? Well, I don't know. Would anyone like to answer that question? That's maybe that's Carol. I think.
I guess I'll start that one, right? I mean, a blockchain is a communication system, right?
Okay.
So it's a database management system. So a blockchain letter of credit is a letter of credit, but the way that it's communicated is using a technology called blockchain, right? So it's a letter of credit. I guess I never thought of it. It could be sort of, it's a virtual letter of credit in a way, right? Because everyone is looking at it online at the same time. There's never two versions of the same thing.
Okay.
But
Carol,
follow the same.
Keep going.
Standards. It follows the same standards, right? It's got to be under UCP, EUCP. So on the legal framework, it's exactly the same, right? It's just the communications medium is different.
Yeah, Carol, I think that's a really good answer. And Sean, is it?
No, I just add to that from a bank perspective. When we've done this, the benefit of the blockchain LC, as Carl points out, is that everybody's looking at the same transaction at the same time. So it takes out a lot of the back and forth. Imagine a letter of credit application, even a piece of paper comes in, you check, go back to the applicant, go back again, and it's so many iterations. So from an efficiency perspective, it's great from the bank and from the client. The feedback we've had from clients on it has really been very good.
Really great, Sean. Yeah, and I agree with both of you. You know, I'm a banking commission guy. I'm reading UCP every night before I go to sleep. You know, that's how boring my life is these days. You know, so but I would agree with you. What is a blockchain letter of credit? It's a letter of credit. A letter of credit is a letter. A letter is a message. It's just the message says we undertake to pay you. So Article 2 UCP, issuing bank undertaking to honor. It's just as Carol said, it's this letter, this message is transmitted using an alternative technology, which I think brings more security. So really, really practical stuff, guys. I'm really, really enjoying this. So we've about 5 minutes left, and I think we've all had some input. And so maybe I can just go back to Lisa and actually ask her, are these guys convincing you, you know, that the technology is going to narrow the trade finance gap, or not? Are they convincing, you know?
Oh, yes, absolutely. I think Carl and Sean have also summarized the blockchain notion very well. It's a communication interoperability platform. It's not replacing anything. This is what people have got to know. It's just a way that we can communicate faster, better, in a more efficient way, which is also what Sadia's platform allows everybody to do. It's what Sean was alluding to, is that the more this data is shared or communicated, in the end, it becomes easier for SMEs because they're in an ecosystem, their information is accessible, and more people can benefit from that, instead of kind of this idea that in the past, or where we've been in the past, is that, you know, an SME is just constantly having to complete requirements to comply with data. They're constantly having to prove their case for finance. And all of that has created these massive barriers for SMEs to participate in global trade. So every one of these guys has created something that is allowing SMEs to engage in more global supply chain opportunities. And if we are to think about where the global economic recovery is going to come from, it is going to be empowering SMEs into more diverse supply chains, and probably from more riskier markets than before, because we're going to have to look at more diversification from where we look at supply chains with issues that we've got on with issues with geopolitical issues with China and other things. So technology is just going to empower all of this, but it works only if everyone is kind of in it together to collaborate. But
well, we're all in this together today. I can see that. I've no doubt about it. But Sean made the point about the shift to safety, and again, it's just something to illustrate this. You know, the development banks, which is EBRD, ADB, ITFC, IFC, etc., they've never been as busy. And of course, it's really this shift, okay, that's actually happening here, okay? And the other observation I have is, it's amazing what we can do with the technology. Like, we'd never think that we would be able to have a kind of a really engaging session like we have 1 year ago, you know? I had used Zoom once or twice, and I didn't like it. I just didn't like it. I didn't gravitate to it. But now I'm really getting to like it. Except now and again, I have a Zoom panic when I can't find the link and everything is just going crazy. But most of the time, I'm kind of getting it okay. So you're all giving us hope. And here in the UAE, we've a lot of hope. Like everyone else, we've had huge challenges. We have challenges again, but there are, you know, hope. You know, we've had the Hope probe going to the red planet, to Mars in orbit. That has really given us hope. We look at the airlines here, Emirates and Etihad. They shifted their challenges, but they shifted significantly to provide very, very important humanitarian services in moving cargo to emerging markets. We've Expo 2020 coming. Challenging, but we're looking forward to the opportunity and to welcoming you all here physically for Expo 2020. That's going to happen. It's going to be irrevocable, like a letter of credit. So just to wrap up, guys, we've only a minute or two left, and I know we could talk all day, but I'm going to go to maybe each of you and just ask you maybe if you could just give us a 10-second word of wisdom for some step or some initiative we should be looking at in terms of facilitating trade and trade finance. But we start, Lisa, word of wisdom. Thank you.
I've spoken enough, so I'm handing it over to the tech guys.
Okay, you've given us so many words of wisdom. We've had our quota for today. That sounds reasonable to me. So Slava, over to you.
I think the word of wisdom is to indeed collaborate and to try to look at things from a different perspective, right? Because if things are done in the same way they have been done for this whole time, the same problems will not be solved. So you need a different mindset in order to solve the problems that weren't solved before.
Okay, evolution with a new perspective. That really sounds good with me. So there, please.
I would say collaboration to create a network effect, which will result in a greater benefit to all and a win-win situation for all, whether it's the SMEs, their bankers, whether it's large corporates, whether regional banks, local banks, or international banks.
Well, that's wonderful words of wisdom, Sudhir. And there's only one thing better than a win-win situation, and that's a vin-vin situation. Just so you know for next time. So, Carl, over to you. Words of wisdom, you know?
I can't beat vin-vin and collaboration, but I would say, I think it's, technology, collaboration. You have all these networks out there, and it's not going to be one network. It's not going to be one standard, right? It's going to be that interoperability, right? Because no one can build one thing and not, and take over the world. So it's collaboration in terms of networks collaborating, ecosystems collaborating with each other. As Lisa said, there's all these different data points that need to come in. That's going to really make it possible.
Great, Carl. I think we're all singing off the same page here. And Sean, okay, your words of wisdom, additional words of wisdom, may I say?
Yeah, I don't have too much to add. I mean, other than to say that digitalization is not something in and of itself. It's not a luxury. It's not a nice to have. It's an urgency. It's something that has to happen. And as I said, every party in the equation needs to recognize that it's urgent.
Great. Well, thank you, dear panelists. Thank you, Lisa, Slava, Sudhir, Carl, and Sean. And I really think this was a wonderful panel. I'm really convinced that this fintech is really wonderful. There's only one thing I can imagine that could be better than fintech, and that might be vintech. But that's a debate for another day. So, dear panelists, dear viewers, thank you for your valuable time and attention. We really, really appreciated it. Thank you very much. Thank you. Bye-bye.
Thank you. Thank you.
Take care.
Thank you. Bye-bye.